Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, June 14th, 2010. Well, folks, the markets initially rallied higher only to roll over off a key master level that, again, we shorted for over $1 profits on the downside. And again, you can just see this market. I gave the level out in the intraday stock chat and in the nightly video to all the research center guys. And again, that level was a beautiful shorting level. You can see it right up here. You went right through that even number 111, and I'm going to show you exactly why that level was the top level of the day. And I even wrote an article published on the Intraday Rant and Rave blog, free to everyone, nailing that call just as it happened, saying that this could be the top for the day. And sure enough, we've seen a massive pullback. Now, why did we know this level? I want to talk some technical analysis here, folks. First of all, what you have to do is look at the larger time frame, and what I'm going to do is scan out. And what you're going to see here is the momentous level at the 111 point of interest that's going to tell you everything. See this level up here from the 3rd of June? This pivot top right here between 111 and 111.10, that pivot top is exactly the high level of today. That's your shorting opportunity. And again, utilizing that, I unloaded my last position here, my last large cap position on a stock to the long side, taking 20% profit since we nailed this call on the long side. And again, I've had multiple plays since the last, really about early to mid last week that I've been accumulating. And sure enough, the market did rally. Now it's gotten up to the level where I think in the short term, the highs are in and the markets are, again, pulling back intraday here, selling off. Now, we are still positive on the day. Don't get me wrong. The Dow is up 32 points. The Nasdaq's up 10. S&P is up about 3. But we were up much, much more at that point, folks. I mean, the markets were up close to 100 points, right around that Dow 100-point level. And again, we have to continue to realize what's going on in this market. Things are not better. You can play bounces, and you can see us, folks. InTheMoneyStocks.com, we play both sides of the market. I don't care which way it is. I'll position myself for a few days on one side, then position myself for a few days on the other side, and make money both ways. We've been short this market. We've been long this market now. Again, just recently unloading those long positions. I unloaded some Thursday, some Friday, and then the rest today in a large cap mess. And sure enough, ATPG was that play here, and I want to show you that one, folks. ATPG. The buying opportunity on this one went out at a buy opportunity. I'll show you the 60-minute. You can see here at $8.42, $8.42 was my long entry right here. Since then, look at this. Up, 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 up. We now went over $10, and I took 20% off the table. That's what it's all about, folks. It doesn't matter which way the market goes. I couldn't care less if this market goes up or down 10% in the near future. It's which way am I going to position myself, and I'll make money both ways of this market. Swing trading. I'm not even talking day trading. We do that too. Swing trading is the way to go. Now, the markets, again, we topped out beautifully at those levels, and we can see, again, how things are going to play out. You can see right off the 50 moving average here, 50 moving average starting to get a little bit of a bounce. All right, this is a little bit of a fake print down here, so you want to ignore that. Not only is the 50 moving average important, but you also have gap fill right here as well. The yellow trend line equals gap fill. So major support right here. Ultimately, you're getting a bounce coming in the market. You should expect that bounce based off first hit of the 50 moving average and, of course, gap fill along the yellow line. Sure enough, market's getting a bid. We're up about 40 cents on the SPY. Still positive on the markets. Dow up again 33 to 35 points, but we're well off the highs. I mean, the highs literally were 111 and 12 cents, $111.12 on the SPY. We're trading $1 lower on that, basically 100 points off that level on the Dow at this point in the afternoon session. And again, this is something we need to be aware of because you have to wonder, is the market going to consolidate for a few days or is it going to really roll over? We obviously know Greece still has problems. Spain, Portugal, all right, you name it. Hungary we heard about last week, early midweek. That's another issue there. Things are not going away, but you are seeing the euro bounce sizably today. Look at the euro today. Now, it's off the highs again, which makes sense. The euro, obviously, when it drops, the market comes with it. When the euro goes up, the market goes. Look at the bounce on the euro right now. We just showed you that there's a bounce on the markets coming in. So you know that the levels are working here. The keys are, again, the Forex market or the currencies market here. You can see very, very clearly that this chart almost looks identical to the SPY chart. The euro's come off the highs, but still, look at it. Closed here on Friday, folks. What a move. And the euro trading up huge on the day. The dollar getting punished, absolutely bombed here off of our key levels. And again, the euro was something that we went long mid last week as well, right at the lows, and rode it up for a beautiful gain as well. The profits continue to roll in. More profits today and more profits for tomorrow after I give out more trades in the coming days, in the coming hours in this market. Whether it's swing trades, day trades, it's there for the taking. It's up to us to utilize that and manage it correctly. So the dollar, again, take a look at your daily dollar chart, look at the rollover on the dollar, and look at the rally we've had. So see this 1, 2, 3, 4, 5 days or so on the dollar. Dollar really started to fall the last 3 days, 4 days in the market, and you can see on the SPY daily, the market's had a huge bounce. See how it's reverse of the dollar. You have a little bit of a W possible on the daily pattern showing up. That is another thing we want to keep close eye on as well for a possibility of a V pattern, maybe another move up later in the next couple weeks. We have to watch again to see if this thing develops. If it does, we'll be on the right side of the trade just like we always are. Now, a couple other things to go over. There's some small caps moving today, some Chinese plays moving today. There's a lot of plays that look pretty attractive in this market we want to keep an eye on. I'm not going to spend a lot of time on them now. They're going to be for the nightly video tonight when I do the 40-minute nightly video. That's for our premium members of the Research Center. They're going to get it all the lowdown, all the calls, all the analysis. And one thing is interesting here, guys, is something that I noted all day long. I even wrote an article on the blog on this one as well. Goldman Sachs has really been flat to negative the whole day. That's a bearish overall indicator for the markets. And again, you can see Goldman Sachs here near the lows of the day. And again, never really was positive by more than a little bit at the open, and then this little surge up to the 200 moving average. And that's telling us to be very cautious on this market in the short term, that the gains may have come a little too quickly over the last couple days, and you might be due for a pullback. And sure enough, the markets have pulled back off of their highs. All right, folks, that's all for today. Enjoy. Come join the Research Center. Come join the Intraday Stock Chat. I'll talk to you later. Take care.